Mhm.
Hello and welcome to Spare Change Podcast. Today I have on Melisa Washington. Melissa, we kind of touched base before this. I had crossed paths with you, maybe not so directly, but at FinCon when we were both down in Orlando for this big financial conference. A lot of people are creating content. There's businesses that are trying to help build and promote financial literacy. You were there with StellarFi, and you also had this warm lead into talking about Latinx communities and how financial literacy is something that you're trying to drive there. Feel free to tell us more about that and some of the things that you've learned along the way and what brought you into this space.
Yeah, so first of all, thank you so much for having me. I'm glad we're having this conversation. So right now I'm the media and community relations manager for StellarFi. We're a credit building company. A little more background on me. I am the child of an immigrant. My mom is from Mexico. She left her village at the age of 12 to find work, and she ended up in the US. And then also I'm the child of a veteran, a World War II vet. And so I grew up in Nashville. My parents found, the best community that they could with what they could afford, so we could have a good public school education. But we definitely lacked in the financial literacy space. My mom, she did very well for herself. She's an entrepreneur, but even then, she's lacked a lot of education when it comes to investing and how to set yourself up for retirement. So I kind of had that example on one side growing up. And on the other example, my dad's a World War II vet. He was retired by the time that I was born. And he went through a lot of struggles with relying on alternative financing, such as like payday lending. He would payday lend his social security check every single month to get by, and also had some bouts of homelessness before he passed away when I was a teenager. So have seen those struggles, in the veteran community, in the Latinx community with my mom. Being in the military, I've been in the National Guard for 14, almost 15 years now. And so I've seen those struggles as well for that community where, you go outside of the base and you're being targeted by buy here, pay here, car lender or car dealerships where it's like 24% interest. So there are just a lot of communities out there that there's a lack of financial literacy. And so with the community relations through StellarFi, what my goal there is to really advance economic opportunity, inclusion, and drive economic growth for different groups.
And those things all really touch base in a lot of ways for me. I know growing up, I didn't really start to see financial issues. I saw, we have a house, there's an RV parked out front, there's a boat and a pool in the backyard, and we've got all these nice things, but you know, my stepfather was a mechanic and my mom, she was a dental hygienist. Not saying we were living too far out of our means, but it definitely became apparent later on that we were paying for a lot of things we didn't really need. Um, and then a little further down the road, I started to take note of like how certain things were treated in the house. Like, for instance, so and so paid for this, so that's leverage in any argument. And now there's a lot of financial control, financial abuse in the house, and I'm starting to see more and more of it. As I leave as a teenager, I had seen it so often that was kind of like the expectation. Um, and I left for the military, and now everyone I'm surrounded by, a lot of young kids getting money for the first time in their lives, and they, like you said, they leave base, and immediately there's a lot of debt and a lot of people trying to approach them with either like this get with wow, get rich quick scheme or some sort of this opportunity that they can kind of, like you said, with payday loans or even just investment people that aren't maybe preaching something that's in that person's best interest, but they're preaching something that puts money in their own pockets. Not everybody, but there's a lot of opportunities to be taken advantage of when you're just getting that first taste of freedom. If you're a college kid, if you're someone who's just getting into the workforce, there's a lot of opportunities for you to make financial mistakes. And it usually comes from people who you would expect you could trust.
There's a lot to unpack there. One, you mentioned kind of growing up and thinking, we're well off, we have an RV, we have this, we have that. I think there is no discrimination when it comes to financial literacy. Like you can still have all of those things and be financially illiterate. Like, for example, right now, 150 million Americans have a credit score below 680, like poor and below. That is half of the US population. So, that just goes to show how many people are still struggling with this because sure, can you buy an RV? Could I buy an RV now? Yes. But if my credit is poor, that's the difference between paying, like 15% interest versus if I have a great credit score and maybe paying like maximum like 5% interest. So I think, financial literacy, yeah, there are no boundaries to that, even by like class, race, gender, etc. The other thing you mentioned was, financial abuse. Essentially, that's one of the domestic violence victims is one of the groups that we're currently researching for our community relations initiatives, and that is in about like I want to say it's 98% of cases of domestic violence. Financial abuse is one of the tactics that abusers use. So yeah, a lot to unpack there.
And one of the things that I definitely wanted to address with that, not just the relationship between, say, spouses or boyfriend girlfriend. There are business relationships, interpersonal relationships. People may not realize that they're even being taken advantage of, or that someone else is exercising financial control over them. um and like understanding your own personal situation might not be the same as somebody else's is one of the first steps. So like for me, I try to explain financial topics to people, but sometimes I don't really think about their background on the front end. So a lot of times I'll have to take a step back and say, okay, well, your experience is this and mine is a lot different. So I kind of have to go backwards before I can go forward. So I have to kind of put myself in somebody else's mindset. Like, okay, this person gets money and they don't see a problem with going and spending the majority, if not all of it, on the things they want and not really thinking about, saving and investing for their future. And that's a different perspective on money than maybe someone like myself who's been taught along the way how to manage their money and how to make it work for them. And now I'm in a position to like teach that person like, hey, it's great to spend money on the things you want, but there's also another way forward besides just, like, oh, I'm not gonna guarantee that I live tomorrow, so I'm just gonna spend it all right now. Mindset's a huge part of things. And there's also such a big uh like the US economy is very unique in that we kind of put people in a position of, you know, don't have to worry about paying it all away right now. You can take on this debt and then pay it away over time with credit. That's great on paper, but when it comes to practice, a lot of people get themselves in trouble that way. That's why 80% of Americans have debt outside of like a car and a house. They have, or even student loans, they have a lot of debt and credit debt, and they're financing like this might be a little exaggeration, but there was a post on Reddit about like financing a pizza. These things can get really out of control really quickly. And like you talked about payday lending and like cashing out extra loans against your social security, or like buying a Starbucks coffee on credit. All of these things can really pile up really quickly without us really paying too much attention to it. And that's where some of the financial literacy conversation really begins. It's like how much goes out of your bank account without you really even thinking about it, and how much is coming in. A lot of people don't think about, oh, all of my income is taxed before I see any of it. So I'm actually making less on paper than I thought I was. Um,
Mhm.
and I've even heard stories about people who their credit is impacted before they get employed and they can't even get accepted for that job because of their credit score, which is a wild concept. And it plays into the punishment architecture of it all, where you can be so far ahead in mindset, but also if you made a mistake very early on, a lot of the economy is set up to make you pay for that mistake. So when you talk about, oh, you take on debt at a certain interest rate because of your credit score. So my credit's bad and now I have to take a worse loan and be worse off for longer than somebody else who, might not have those same issues that I do. It's
Yeah,
definitely a weird conversation to have.
it is a terrible cycle when you're, so I recently interviewed one of our employees whose score went up 130 points since she started with StellarFi. And she told me about, the struggles of when she had a very low credit score that people don't give you the time of day. And she's right about that. And it's a vicious cycle because specifically to credit building, there are very few options when you're starting out. You might have the privilege of, oh, I have a parent or I have, a family member that can put me as an authorized user on their card. And basically what that means is that, whatever positive payments they make, their credit history, et cetera, like you inherit that, right? So maybe you have the privilege of that. Or maybe you have the privilege of, I can take out this loan, I can do a deposit, and somebody can co-sign for me, like somebody who has great credit. Maybe you have the privilege of that. But for people who don't have that privilege, their options are so limited. They're relying on either alternative lending products like those payday loans, title lending for their cars, pawn shop, et cetera. They're relying on those that historically have very high interest, or they're relying on products like secured credit cards or secured loans. And the way that works is you have to put down a deposit for what your limit is going to be. So you have to put money up front, and then you're paying high interest on your own money. And so imagine, you're living paycheck to paycheck and you need to put down $300 deposit. Like, how do you do that to begin with? You're already taking, a big chunk of that money that perhaps was for emergencies, perhaps was for something else, so that you can build your credit. And so, yeah, the options are very, very limited, which is, why I'm so passionate about what we're doing now with StellarFi.
And just speaking on some of the like bigger picture, if there's an opportunity for people who are less educated on finances and less kind of confident about how they manage their money and their credit score, like I know personally, I don't have any credit cards. I've never like used a credit card to build my credit. It's just kind of been through on-time payments that are reported to the credit bureaus, and my experience is very limited in credit card use or um, specific strategies to build credit. So I think that's a huge, um, like, it's a huge opportunity for me to learn by bringing people who are experienced or who know some of the background of what can really help your credit. Um, Before starting this podcast, I didn't really have a big idea on what was helping or hurting my credit, and then kind of realized over time that account age and history of on-time payments, how many accounts you have, what your
Mhm.
credit utilization, all of these different things play into your credit score. I know one of the things we talked about with StellarFi is when you link your banking information and when you link kind of your bill payment methods, those things start getting reported more than just the typical things that get reported. There's additional positive on-time payment history, and it builds your credit score faster than what it would typically be without using the app or using some of the resources that are provided, and then also building on a line of credit that's provided, um, and kind of like exercising what it means to build good credit versus just taking on a line of credit without really having the knowledge behind it. And there's resources to learn through the app. I think that's a great part of it. And again, the power of like networking and social media really brought the two of us into some of the same rooms. And I definitely want to talk about how, before Instagram, I didn't really have this plan to start a financial literacy podcast, or I didn't know anyone who was in the financial literacy space. And now I have this much larger network of people who all have the same common goal of like helping other people learn about what they can do with their money and what their money can do for them in the future. Um, so definitely would love to talk more about some of the things that people can use StellarFi to do, whether it's that line of credit that we talked about, or just reporting more positive on-time payments.
Yeah, so I think to start, we could talk about like what are the factors of your credit score? So there are quite a few factors. There's payment history, as you mentioned. Basically, a credit score tells a lender how likely you are to pay them back. And so they want to know what's your payment history? Do you pay your bills on time? How much of your credit are you leveraging? So, for example, let's say you have, $5,000 credit card and your credit card is maxed out all the time, a lender will see that and they might say, oh, this person is like leveraging their credit a lot. Maybe we shouldn't let them borrow more because, it's less likely we're going to get paid back. So how much you are utilizing the credit that you have, the length of your credit history, how long have you had your accounts for? New credit inquiries. So like if you're applying for a bunch of different credit cards at once, that looks a little suspicious. And then also your credit mix. So, like, what type of accounts do you actually have, like loans versus credit cards versus store cards, et cetera? Like, how do you handle those different types of credit accounts, essentially? And so, the biggest one here is your payment history. Your on time payment history accounts for 35% of your credit score. And then credit utilization is a pretty big chunk of that too. So, what we do at StellarFi is when you sign up, first thing you do is you get a free credit score. That's before you pay anything. You can get a free credit score. After that, you can open your credit account. And we have two different accounts right now. We have a $4.99 plan and a $9.99 plan. With the $4.99, what happens is you link in your bills and you can pay up to $500 worth of bills. And whenever that those bills get paid, we report that it looks like a $500 line of credit or trade line on your credit report. The great thing about it is, one, if the bills are paid on time, so you have that positive payment history. Also, because you are paying those bills in real time, you're not going to carry a balance on those. So that looks really, really good for your credit utilization. With the $9.99 plan, the way that it works is you can pay up to $25,000 worth of bills. So to give you an example, I wanted to say I was starting off like paying about $500 worth of bills. And so I had like a $500 line of credit reported. And then as you pay more and more, your line of credit is going to continue going up. So for example, my line of credit now, what it reports as is I have a $3,000 line of credit. So that's awesome for, your payment history. It's awesome for your credit utilization. The other thing that's great here is, you're getting your bills paid on time. That's a huge thing. And we're reporting bills that you typically would not get credit for. So your rent, your utilities, your subscriptions, gym bills. I have my health insurance premium linked into my account. And so you're getting credit for all these things that you pay them on time. You're responsible to pay those bills, but you're not getting credit for them. So that's where StellarFi comes in. And that's where, we give you credit for all of the bills that you pay. And we report it to 4 credit bureaus. So by us doing that, we're able to affect all of the scoring models that are out there.
Yeah, and that's interesting to me because a lot of people feel like, oh, well, I'm paying all these bills on time. What's the point of me doing that if it's not getting reported? Or
Mhm.
even just like all of my money that sits in the bank isn't really doing anything for me. So what can I do to like kind of utilize what my bank account is doing when I pay all my bills on time, or utilize what my bank account is doing so that I don't have to like just blindly trust banks now. And this is one of the things that we talked about, especially recently, seeing regional banks kind of like fall on their own face and understanding how that affects people's trust in different financial resources. Now there's a tougher argument, you know, what does FDIC insured really mean, or what
Mhm.
is the bank doing on the back end with my money? Those are all now bigger concerns because it's been brought um, into the light for everyone to see, and now people have a greater understanding of how banks are working, um, not only as a service to you but as a business on the back end. How do banks make their money? um, so now people probably have a much bigger desire to build credit and kind of manage their money in a more proactive and like direct way versus just putting money in the bank and saying, oh, well, I've got this much money in the bank, so I can kind of live based on that number. Um, I don't know how much of that you've seen already, or how directly all of the conversation around banks and credit has been brought up, but I would love to hear more about that as well.
Sure. So, I mean, about the banking situation, I'm not a banker or anything, but I do a lot of research. So, I do know that 20% of US adults are either unbanked or they're underbanked. They're not, either they don't have a banking institution or they have a banking institution, but they're not using it to its full potential. They're not using all of the financial products. So, and I would say, I mean, there is definitely a level of distrust for some people, and that can come from behavior. So, for example, like when I had my first legit job where I had like a W-2 and I got like a check cut to me, I didn't go to the bank to go and cash it. I went to the liquor store because that's what I had seen my siblings do. So that's what I went and did. And I paid like $4 off of my like $80 paycheck for that because it was a habit. It was something I had seen before. It was something I knew that I could go in there, I could get the money quickly and, be in and out. Whereas banking was a little more, I don't know, it was just a little more intimidating for me to go into a bank. And so I feel like, but you mentioned, being on social media, financial literacy. I feel like that is opening up such a world for people to learn like what is out there, who you can trust, what type of financial products you can take advantage of, how to responsibly leverage your credit. Because it's not a bad thing. It can help you get the things you want as long as you use it responsibly. So, you mentioned, getting into Instagram and really getting into the financial literacy world. That was me about like a year ago. I knew some things and I got my credit good and everything, but the way that financial literacy has blown up on TikTok, on Instagram, et cetera, I think it is just such a benefit to Americans, to the world in general.
I do want to I always have a counter argument for social media because like as much as I advocate for it, I'm like, this is a great tool for networking. This is a great tool for kind of finding out what you don't already know. There is also this huge opportunity on the other side of things for people to take advantage of you, or to misinform an audience.
Mhm.
So while there is this huge opportunity, I do like to like let people also understand and know, there are people out there who don't have your best interests at heart, and they will take specifically financial advantage of your situation, because trust is an asset in a lot of ways for
Mhm.
good and bad actors. So people can help you out there, and people can definitely hurt your situation. So as much as I advocate for it, I definitely like to highlight that, you could end up in a situation where you've trusted someone's financial advice and now you've invested like 90% of your life savings into something like FTX, or you've put your money into even something like Luna. Like cryptocurrency is so huge on social media, and celebrities will get paid to promote it by the company that's running essentially either a fraud or something very close to. Um, and there's so many opportunities to learn the hard way, and I hate that for people. But I've talked about the ways that cryptocurrency and different financial like tools have been marketed. I always have like this tendency to mistrust or
Mhm.
distrust entirely celebrity marketed like NFTs, cryptocurrencies, because more often than not, those people aren't investing their money into it. They're using a company's money and they're being paid to promote it on the front end, and then they sell as soon as the promotion's over. Uh,
Yeah.
but I don't know how like I don't know how prevalent that's going to be in the future, because there are going to be regulatory efforts to kind of offset those sort of scenarios. I mean, even Kim Kardashian's $1 million fine, slap on the wrist, sure, but it sets a precedent that there's going to be a lot more strict policy around some of the newer financial technology and financial resources that we're seeing day to day. Um, and I'm both for and against that, because I don't believe that a government should have entirely controlled our finances, and I don't believe that our finances should be entirely unregulated at all. So I'm
Mhm.
somewhere in the middle of those two. I don't know where you sit on the whole thing, but there's definitely a lot to learn as far as what's good and bad in the financial space.
For sure. I'm glad you brought that up because that is a good call out. Misinformation over social media. Like, yes, that is, while social media provides us a lot of knowledge, it's important to really do your research. And then you mentioned, government regulation, et cetera. I mean, our founder and CEO was a former bank regulator. So we're pretty on the up and up with compliance and everything. Make sure that the consumer is protected. That's important that the consumer is protected. But yeah, there are also a lot of like companies like us that are financial technology companies that are out there, providing resources and providing tools to, advance your economic status, if you will. Quickly, maybe a little more quickly than traditional products. So, but yeah, it's definitely important to do your research, and be careful with who you trust with your money.
Yeah, and like I said, with the audience that we're talking to, people that are just getting started, they're the
Mhm.
prime target for those kinds of things. Um, but I definitely like to discuss, and one of the big things that struck me with both yourself and StellarFi is like there's a huge community around both, and some of the things I grew up on, like riding the bus to school and hearing, the Breakfast Club on the morning radio. Now I'm kind of like looking at some of those same people. So like Angela Yee from the Breakfast Club really tied in with StellarFi herself and Stacy Tisdale, like we talked about, both there from day one with StellarFi, and seeing, kind of how much effort is being put into the financial literacy content um, in those communities, and building up even just the background of some of these folks that are tied in to the whole conversation around StellarFi, around financial literacy for disadvantaged folks, is huge, because I've seen so much like I've seen a lot of lackluster stuff be brought to the front, like, oh, here's this, loan product where there's an app where you can just get like a $500 loan, but they don't really talk about the back end of that, where you're constantly paying that company back and exorbitant interest, or like just something that you don't really want, and it gets promoted heavier than, something that's a little more legitimized, or something that's got more of customers interest at heart than, like shareholders, or people who don't really care about the product in the end. there's a lot going on, um, just in like communities like FinCon, Mill Money Con,
Mhm.
um, where the conversation is so much more structured towards how do we help somebody versus how does this product make money? It's so much different, and that's a lot of what's attracted me to it. Is even just the conversations that we've had before. Um, I think there's a lot to be said for people who market. This is a tool to help you rather than this is something that we're trying to sell. Like it's a lot different and more accessible. And I think that's the direction that financial technology and resources are headed. Is accessibility is huge, and the more that technology advances, the more financial resources there are going to be. So I
Mhm.
always have a bright outlook in that sense. Of course, there's going to be bad actors everywhere you go, but the amount of technology and the amount of resources that we have moving forward is going to only grow and continue to be more helpful and more useful to your average investor, average consumer, um, who's just getting into the financial literacy and like just learning their first financial lessons, whether that's like I'm paying way too much for this car, or look at all
Mhm.
these bills that I have. Where's all my money going? That conversation will happen, I believe, personally, less and less. And homelessness. I know personal experience with homelessness. I didn't really know what my moves were growing up once I had left my uh, house where I was living with my mom to then kind of house hopping between different people and not having really a solid place.
Mhm.
Um, and now seeing my mom deal with some of the same issue, I think there's so much to be said for like providing financial knowledge to average folks who don't really have those tools. And me being raised in the poorest county in all of Florida, like
Mhm.
multiple years running, go team. But also there's this huge conversation. Like I tell people I literally had to leave. Like there was no way that I was gonna continue to sit in the same place. And
Mhm.
some people are just not afforded that opportunity to up and leave a negative financial situation. So I think it's important to have um, more accessibility and resources for those people who feel like they're stuck and that there's no way out of this negative situation that just keeps continuing to spiral downwards.
I completely agree. Yeah. I mean, yeah, the best fintech companies out there are the ones that are focused on, like you said, inclusivity, accessibility. And there are a lot of exciting products out there. And I mean, just speaking personally, like within my role of StellarFi, that's at the core of our mission. We're a public benefit corporation. So you mentioned like stakeholders interest versus consumer interest. So consumer community interest is really where that's at the core of where we're operating, and that's very important for us. And earlier on you mentioned, trying to understand and level with people what their financial situation is, something that you might not have experienced before, and that's part of what I do, by researching and interacting with certain groups that have been historically, disadvantaged, or have not had access to financial resources. It's important for me to really talk to them and understand, like, what are the pain points, what are the struggles here, and if there's something that we can optimize within the product for that, how do we get that going? So yeah, financial technology is it's a very interesting landscape, and it's exciting to watch it evolve.
Yeah. And I try to drive like I try to keep things in a conversation. So
Mhm.
if I wouldn't say it to one of my friends talking about money, I try not to like dive too hard on it for an episode on the podcast or like a piece of content for freelance corporal. If I'm making like a financial meme, I'm not going to throw in like all these terms that people don't understand.
Mhm.
Um, so a lot of my focus is like, how do I speak to someone in a similar situation or a similar age group as myself, I talk to them in a normal manner,
Mm-hmm.
something that they can understand more than they want, like, to expect from like a financial literacy guru. Like, you expect this long conversation that's drawn out and them to show you the map of like where your investment could be in 30, 40 years. That's really great on that side of the spectrum of financial literacy and financial content. But I think there's so much more to be said for the generation who has this TikTok attention span of like 15 seconds. What can I tell them that's going to change the mindset? Like, you just got your first paycheck and it's already gone. How do I speak to that person?
Yeah.
Um, because at one point, I think we've all been there. You got your first gig and you are blowing through money faster than you can bring it in. Um, those people have a lot different conversations about their money. They're like, oh, I really got money now. I'm making, $30,000 a year,
Mm-hmm.
and I got this sweet gig. I'm a manager at this store, like XYZ. Um, Not to diss on that situation, but there's a lot more that those people are going to learn over time. And if we can get there early, it's better than getting there, when they're in their middle of their crisis and they have no hope to like change their situation. Now they need a resource. I'd try and get to them before they need or want what I'm trying to tell them. I'm like, hey, you might not give like any cares about this situation, but here are the things that you can do now to kind of put yourself in a better situation.
Mm-hmm.
Um, and younger people aren't like exempt or immune to a seemingly older person's issues. So I know my situation. Um, Bought my first home in 2021, so the market was kind of, there were sides of it that were way high. You couldn't lock on a property because you kept getting outbid on it. And there's also situations where I live in a military town and buying a home here, the prices are usually pretty stable. So the multifamily homes are kind of the average here. So, um, and my situation, I really got shook up at the end of 2021. And it was like, I lost a parent, my wife lost a parent.
Mm-hmm.
We had to move in her 18-year-old brother, and we're kind of like experiencing all these new financial situations for the first time. So, whether that's like understanding estate tax and how to manage assets and property that are under a probate lawyer, and now you've got all these different like responsibilities you have to figure out. Okay, this is so and so's life insurance policy. We're getting all this money, so what taxes are going to be paid on it up front? Or
Mm-hmm.
we have an extra person living with us. How is that going to affect the amount of money we spend on food? Or how's that going to affect the light bill, the power bill, and water use in the house? All these
Mm-hmm.
little things pile up. And like I talked about earlier, my mom's situation isn't great. We moved her in, and I mean, it didn't last long, but financial situations for younger folks can really change up really quickly if there's some sort of unexpected or unplanned event. So a lot of young folks that I know have a habit of, totaling out their car pretty early on.
Mm-hmm.
So you don't have your car paid off, and now it's like in the scrapyard. Good luck. Um, so I think a lot of younger people get thrown into financial situations they're not prepared for or didn't expect until they were like much older. Um, so I definitely talk about a lot of things like that, where it's like, how do you plan for a loss in the family? How do you kind of get ahead of something that you can't put a date on financially? Like,
Mm-hmm.
I didn't expect to own a home. I expected to be renting and like moving around all the time, but here I am. So now I know that a fixed rate mortgage doesn't mean that my payment's going to change or going to stay the same forever, because my
Mm-hmm.
state just upped the taxes. So now I have to pay more. These are things that I learned over time. Or a 20-mile-an-hour wind can blow my fence down and now I have to build a new one. These are
Yeah.
all things that you have to learn without really preparing for them. So I think
Yeah.
unexpected financial situations are huge, especially when you're young and you don't have like all this money saved up to deal with a problem that you weren't ready for.
And you've never done it before. So
Yeah.
yeah, no, I completely agree with you. I mean, yeah, typically, well, in my experience, like, yeah, things that I'm encountering for the first time, or these unexpected things, it's like things that I've never seen before and don't really know how to handle. And yeah, this is just like normal. It's like you get to a point, you're like, when are we going to move on? When am I going to stop getting surprises? It never stops. It keeps going. So, I'm thankful for creators like you that I can go to TikTok real quick and be like, how do property taxes work, and kind of go down the rabbit hole that way. So yeah, there's a lot that can happen financially in life, especially for young people. But I think just seeking out education, preparing yourself as much as you can with savings, building your credit for those unexpected things, I think that is something that can be in your control. A lot of things will be out of your control, like a family member passing away and worrying about the funeral, et cetera, et cetera. But control what you can. And then when you can't control it, educate yourself and find out the best solution for you. There's always help out there. Within our platform, we have access to free one-on-one credit counseling. So I definitely recommend that for folks. There are institutions such as community development financial institutions, or CDFIs, within your community that can help you, several nonprofit organizations. So control what you can and seek help when you can't.
Yeah. And I think one of the biggest things is admitting, you know, this is my situation. I didn't really have control over any of it. And now I need help. And knowing
Mm-hmm.
that something's out of your control and that you might need help with it, that's kind of the core situation when we talk about these either folks who are already disadvantaged or people who are getting that first little bit of money. Like, they don't know what's coming next. If there's something that offsets that financial situation, it can be really crippling. A lot of Americans don't have money saved up for their next financial crisis, or even maybe their next like bill payment. So getting ahead of all of these different situations is really critical, and being prepared is like paramount to everything else. But
Mm-hmm.
that's not to say that there aren't resources. And I know a lot of what I kind of try to guide people to is like, hey, I'm not above going to the Salvation Army if grocery money is gonna like really kill me. And um like, yeah, I have a steady job, but sometimes you just need that little extra bit of help or that push to get you to the next um situation where,
Mm-hmm.
like, okay, I don't have to worry about this money. So I can start paying down all of my other debts, or I can afford this now, and this is something that I need, versus like, all the other things that I'm paying money for are like out of my control. So I have to manage so much in my day-to-day life. I know a lot of younger people get confronted with like, wow, so rent is higher than paying a mortgage, but also like all the maintenance is on me, and all of the making sure everything works in the house is on me now, versus a landlord taking care of everything. But I mean, you're also not building any like equity or value in your own life. So you
Mm-hmm.
kind of like put those things off. But I mean, everybody's got their own situation. Again, this isn't something that's like exclusive to you or exclusive to me.
Mm-hmm.
There's going to be something like even what you talked about, CDFIs, where like that's something I've never heard before. So now I have to go like look that up after this. There's definitely a lot of opportunities to learn, and I think you've brought a lot for both me and the audience to kind of dig through. Okay, well, Melissa said this, and this is something that I'm now going to implement day to day. How do I build credit, or how do I set my money up to, benefit me more than it is currently.
Mhm.
And again, there's so much that can be said, but I think what you've brought today has definitely helped put a perspective on, credit building, what disadvantaged economics can look like if you just like um, put more resources and effort into those communities. They can really show potential and grow beyond any expectations or limitations that they had before. And I appreciate that conversation and all of the things that you brought to the audience today. If there's anything you could leave the audience with, like one piece of advice or um, anything that you think would be important to your younger self and your initial financial struggles.
Mhm. I would say my piece of advice would be not to suffer in silence. Do not suffer in silence. Do not, do not, do not restrict yourself from finding help. There is help out there. There is hope out there. You just need to ask for it. Don't sit with that pain because you're ashamed. People have been in this situation before. So that's what I would say to my younger self that, came home with a 4 month old with the lights cut off. Don't suffer in silence because you're ashamed. There's help out there. And yeah, thank you so much for having me. I'm happy to be on this journey to promote financial literacy, to drive economic growth. And yeah, thanks.
All right. And just before you go, if there's any resources or how people can learn more about what you're doing and how they can find um, you and kind of learn more if they were interested.
Yeah. So for StellarFi, it's StellarFi, StellarFi.com is where you can learn more about StellarFi, sign up for the product. Like I mentioned, you can sign up and get a free credit score, like no payment involved whatsoever. And then you can follow us on socials at Get StellarFi. If you would like to follow me, you can find me on LinkedIn, Melisa Washington. I'm the only Melisa Washington with one S in her name. So yeah, I would love to, have you along for the journey.
Awesome. And again, appreciate your time. Definitely looking forward to talking more at Mill Money Con and any future conversations we have.
Likewise.